Well, good afternoon, everybody. Actually, I could say good evening. It's just gone 5 o'clock British summer time here in London. This is Sam Evans with you of Online Trading Academy. Welcome to an the FX Street webinar hosted by myself. Going to talk this session a little bit about the dynamics of trade management. I've been doing these sessions for about maybe coming up for a year or so now. I can't believe how quickly time flies, but I've never really kind of got into the trade management side of it. I mean, it's a big subject, and given the limited time that we do have, it's such an important one. When I'm working in the classrooms, it's kind of probably one of the things that I focus on the most. And there's no real kind of right answer to what is the perfect way of managing a trade. There really isn't. I mean, there's so many different ways of doing it, depending on your style, depending on the markets that you trade. But I did want to explore it with you guys. I'm going to just work on charts with you and go through some concepts here. I want to try and keep it, as you know, when I do these webinars, I like to kind of keep things as practical as I can. But out of the many students I've worked with over the years, I would say that trade management is the common theme that I get questions about. Regular kind of queries about, am I being too greedy on trades? Am I, being too conservative on trades? It's an interesting one. We all want to get, 10-to-1 trades. We all want to get 20-to-1 trades, but as we know, they don't always happen. Well, there are different schools of thought out there. I was actually mentored by a guy, and I still am mentored by a guy who works all about just being right very rarely and loads up the boat when there's other people who want to be right a little bit more and go for more generous things. Like, you can't have both, is what I'm trying to say here. We can't have high risk to reward ratios and also high success rates. It's very, very difficult to do. If you're going to head down, you get people who are trying to do like 1.5-to-1, 2-to-1 trades, well, they're going to get more winning trades, but obviously their average wins are not going to be as big as those their average wins are not going to be hugely bigger than their average losses, whereas somebody maybe gets the odd 10-to-1 is going to have a big difference between the average win and the average loss, but they're just not going to be right as often. So there's two ways. It's kind of a seesaw, if you like, and we've got to balance it out. Well, I thought to myself, well, how can we kind of best convey this, talk about it as well? What can we do to give you guys a little bit of something to work with after? So I'd like to kind of do one of these webinars and give you something you can kind of put into practice to at a later date. So I want to kind of go over to the charts, and we'll see what we can come up with. Have a little think about some of the things on here as well. And I would say to you, when it comes to your trade management, guys, and can you all see this okay? I've got two charts. I've got a 2-hour chart and a weekly chart of the euro dollar up here. I thought I'd just bring this one up now. The way I'm going to do this, I'm going to take a look at this chart, because this is a recent trade I did in my online trading room, the extended learning track. Then I'm going to look at some trades that have yet to happen. So I'm going to kind of look at one and just show you some of the thought processes behind it for maximizing, how we could manage our trades. But and this is going to be using the supply and demand, obviously, which we teach here at Online Trading Academy. But I want you to keep this in mind, because I also know very clearly that not everybody trades supply and demand levels. It's not the only way to trade. By no means do I think it's the best. I think any trading strategy that kind of gives you good probabilities, very much rule based, and it's simple and easy to execute, wins my favor. So by no means, I'm not saying this is the only way to do it, but some of the concepts on here that I am going to go over, I think you could employ into your trading as well to help you. So I want to look at kind of a trade that we literally took on Thursday morning and how we planned that. And also I want to take a look at some different ways we could have managed it. And then we'll maybe look at an example of one that hasn't yet happened, and that will kind of cover us all quite nicely. So some of you guys I know, I see the familiar names in the room when I come in here. You will have kind of worked with me or seen webinars and so on that I've done. And I think it was, let me just check the date. Yeah, it was the 21st. I was just doing the webinar on the 21st. So let's just put a line here. And like I said, we'll do this on literally, it's easy for me to do this one because this was like literally a trade that we took, or that we planned in our XLT, and then I'll look for one that is not yet to happen. But firstly, we're always trying to look for, where's a good entry? And as you know, looking for an imbalance between supply and demand is going to be our key. Now, I happen to find, I like this 2-hour chart if I'm going to do smaller time frame trading. For me, this is about as low as it will go. Occasionally, I'll bring in maybe a 1-hour chart. But last Thursday, I was looking for a good level. And you'll hear me talk sometimes about the odds enhancers here in the room. The odds enhancers are something we teach in great detail within our classes. But one of the things that I really like to look for when I look for an imbalance between supply and demand, where the big boys stepped in, and using the bigger time frame charts helps you to do this, is to look for a good sharp move up or a good sharp move down. Now, at the time, on the 21st, you can see here, it was about literally 8 in the morning when we started. We'd already seen a downtrend in the euro. We'd come off some key areas. And before I kind of explain a little bit more about that downtrend on here, this is something you've got to do. Let's look at the entry, then let's look at the the trade potential on it. I want to draw your attention to this particular area here. And this particular area here, and this is so cool because I had like students who managed to kind of take this trade as well, which is great. And, you know, students who took this too emailed me about it as well. And this was a great opportunity for us to take a look at. But we were looking for a rally in price to rally up because of this round number. And a little tip, something I always like to look for in the Forex markets is I always like to look for, you know, opportunities around the round numbers, like the 1.12, 1.3. Do you see how you had a good sell-off at 1.12? You had a good sell-off here, a basing pattern and a drop at 1.3. A good basing pattern and a drop at 1.14. Do you see all those kind of round numbers coming into play? It's obvious, but it's so obvious you don't want to overlook it. So I always try to look for opportunities here. And this was just literally trying to go with this trend that we were seeing. And I am cautious about how much room that on the downward side was available on the euro dollar because of key levels below us, which we'll bring into play in just a sec. But we were looking for prices to rally into this level of supply between 1.190 and 1.1217. So you've got like about 30 odd 35 pip area. Now, some of the characteristics that we were looking at here, okay, very little time spent in this area. So you see there was a drop, a little bit of a base, and then a good strong drop away from here. So there's not a lot of time in that area, which means obviously there's kind of a competition on there to really kind of sell that euro. And interestingly enough, this was a nice support area, 1.12 previously. Do you see how it was a support area once before? So I love it when I see these old support areas and then they do break eventually like they did, and then they form these new kind of supply levels or vice versa. It all makes sense, guys? So, you know, the old support resistance kind of thing, instead of just kind of jumping on a kind of assuming it's going to be resistance, I like to see if there's going to be any supply, any kind of institutional kind of action that took place. So we can see we had this good sharp drop in price. So obviously, as we're on that Thursday and we're waiting for it, we're like, okay, good strong drop in price, good round number, not much time here. And then one of the key odds enhancers that we like to look for is a profit margin. So if you take a look at this zone on here, the size of this zone here, and let's kind of mark a little rectangle in here so it's easier to see it. If you mark this zone in like this, you see here, what I want to do is I want to see that I've got at least a 3-to-1 available, or that the price moved at least 3 times away from the size of the zone itself. So what I'm doing is, you see this zone, I'm kind of multiplying this zone and making kind of 3 zones underneath it. Do you all see that, guys? Well, you see how this kind of moved at least 3 times the size of this area here. Do you see that? So it actually a little bit more. That gives me a clue that, actually, you know what, if I do take an opportunity at this particular area here, this is going to be a smart thing to do because it moved at least 3 times my risk zone, because my zone itself is going to be my risk. Is that all making sense, guys? So you see, if you take in the size of the zone and then you put 3 of those boxes below it, again, I've done it roughly here. Okay, I've done it a little bit roughly, but, you know, I want to see that it's moved at least that, because, you know, if it's only like a 1-to-1, I'm going to be coming straight back into levels, you know, support levels or demand levels too soon, and I don't really want that. So that's all good. So that for me gives me kind of like an odds in my favor on that particular area. Now, that being said, that would mean that our profit target area would be, I don't know, let's say somewhere about this 1.180. If you really wanted to push it, maybe around the 1.07 if you did that multiplied by 3. So let's see what happened on here. Prices did rally up to our area. Didn't quite get there, you can see. Didn't quite get there. And then literally on the Friday, we hit the 1.12 area. Okay, absolutely. We're going to talk a little bit about this. These opposing levels are key. So I'm going to come back to that in just a second, Boris, okay? So let's just think about, hold on to that thought for me, okay? Because at the time, you see this area here, when it rallied, I knew firstly it moved at least 3 times away before returning, yeah? But take a look on this now. We triggered, as Boris, like you read my mind. See this area here as well. We've got a level of demand right here. Do you see that? Now, with that level of demand opposite, what we can do is that thing hitting, we don't quite have 3 to 1. So we knew it moved at least 3 to 1 away. So that gives me the potential for the trade. But when the price actually hit the zone, the opposing level of demand was here. And I wanted to try and get it a little bit lower. Well, look. What could we have done, therefore? What could we have done on setting this profit target? Well, we could have took an entry a little bit higher within this zone. So we said, well, look, if I enter at around 111.90, okay, yeah, and I got to stop above here, yeah, great, but it's only about 2.5 to 1. So what could I have done, guys? I could have entered nearer to the round number. So I could have made my zone a bit tighter. Do you see that? Could have made the zone a bit tighter. And then, bam, hit the profit target just fine. Does that make sense? Yeah? Yeah, that you can see that, you know, the weekly supply I'm going to come into. So you could always make your zone a bit tighter. So when it comes into this, one of the things I like to do is if my opposing levels are narrowing my profit margin, then I don't want to obviously, I want to make sure that I then take a tighter entry. So I'm not prepared to risk quite as much on those areas. Right. Okay. Now, we're going to talk about the trade management as well on this as well. Okay. But I just want to we're just recapping the ideas here. Okay. Now, look, if we take a look at what actually happened, see how this market carried on going much lower, even though the opposing level itself was quite near. Do we all see that? So what could we have done? Okay, well, this is where, if we're going to do some trade management and we're going to maximize our trades, if we want to squeeze more out of our trades, can't just look at one chart. One of the biggest things that we can fall into the trap of doing is micromanaging a trade on a small time frame. So we can use multiple profit targets. And my advice here on this, guys, and something I'd say you could use, and this is for any style of trading, even if you don't use supply and demand even if you don't use supply and demand for your own, you know, your basic trading strategy, you could employ this technique, okay, into using it with other things you're doing as well. So if you're like a moving average trade, like a pullback to a moving average, or you're an old support becomes new resistance and vice versa trader, all of these things are good, but keeping an idea on big picture levels is going to be key. So if we're taking a look on this, would it have been okay to take a profit margin at our demand level, guys, just on that trade chart alone? Just going with that current trend and taking it. Would it have been okay to do it? Would it have been okay to do that? Yeah, of course it would. Absolutely. Not a trick question. Because we didn't know that the market wasn't going to hold this demand area, did we? We never know. And I never ever assume that I know what's going to come next, guys. I always assume that I know nothing. I always assume that I could get it wrong. I always assume that anything can happen. I guess being a married man, I've got into the habit of accepting that. And it works great in my trading as well. Okay, let my wife be right, and she would kind of tell me what's right and what's wrong. So I bring that into the trading as well, you know. But yeah, we don't know when the market's going to rally. So objectively, while that's a good profit target, I know some of you guys will relate exactly to what I'm saying as well, guys. Happy wife, happy life. I do try to live by that. It makes my whole world a lot easier. So what can we do, though? What if we wanted to look, imagine if it does go beyond this level. Yeah. Imagine if it does go beyond this level, where else could it go to? Okay, that's another way to look at this. Now, the way that we would do this is we need a bigger time frame. What we don't want to do is manage our trade on the small time frame. So if you're going to go for your opposing level and take a trade like that, great. But if we want to capture some of these bigger moves, we've got to bring some rules in. And the way to do that is, guys, to see the bigger potential for a trade means we're going to have to look at the bigger charts. So let's slide over to this chart on the right-hand side right now. Now, the chart on the right-hand side is also euro dollar, but you'll see it's euro dollar on a weekly time frame chart. Now, what I'm going to do is I'm going to mark off the key areas of supply and demand. Can you still hear me, guys? Someone just saying that my sound had gone. You still got me, yeah? You guys good? Okay, cool. Okay. So, what I'm now doing is I'm marking off my weekly chart. Now, let me ask you a question. Here's a supply level. Here. Okay. And below us, we have a demand zone. I mean, if you want to just treat this as all one big demand zone, that's perfectly fine. I like there's this little base. You see where this real takeoff happened, this big blue candle at this particular point? If you want to mark off these areas, and again, you don't have to be too kind of, refined on this. Is it really any different? I mean, because it's a supply level on a weekly chart, does it mean the same thing as a supply level on maybe a 2-hour chart? Well, of course. It's all the same thing, but it's likely going to be more reliable because bigger institutions have to trade off of the bigger time frame charts because they're going to have a lot more order inventory that they're going to want to fill. They're going to try and get filled on a lot more trades. And if you want to get filled on a lot more trades, you're going to need a cast of wider net. Okay, got to cast that wider net. So, those bigger time frame levels can become incredibly reliable. I've done some of this bigger time frame stuff with you before when I've done these webinars. It's one of my things that I specialize in. So when I look at a chart, it's all very well having my entries on this 2-hour chart, 1-hour chart, 4-hour, whatever you want to look. But I like to keep an eye on this weekly chart. And the weekly chart to me is probably the most important chart that I use in my Forex trading. Because what I love about the Forex market is when it gets going, it really does pick up its pace. It really does start to move. And to me, it seems that, well, if I'm going to nail a good entry on a small time frame here, so let's name this chart my entry chart. Okay. I could be looking for a 3-to-1 on here. I'm going to make some notes on here. Okay, that's fine. But what about if I want to capture some of these much bigger moves? Who in the room has ever kind of nailed an absolutely fantastic entry like this and then took a nice 3-to-1 or 2-to-1 or whatever off of it, and then they've seen it's like literally just carried on going and sat there and gone, oh my God, I wish I was still on this. Okay? Anyone in the room like, oh man, I nailed that, got out, right? Okay? And just been so annoyed about it. Right, Eugene was just saying, you got a nice trade on the pound dollar, right? Exactly. We've got to use another chart to give us a bigger picture. It's trader's remorse. Isn't it the most annoying thing? And I'll be honest, I've kind of resigned myself to the fact, guys, that you're always going to give something back in a trade. You're always going to, there's always going to be those times when you end at the high. There was a great quote in Reminiscences of a Stock Operator, classic book, where it says, men who can be right are quite common, but men who can be right and sit on their hands are very uncommon. What he's saying, that those, nailing a good entry, you can do it, but sitting the thing out and letting the thing be is a very rare quality. And I agree with this 100%. What I've found is the only way, though, to kind of, I would say, coax myself into training myself to really stick with it, really kind of, sit on my hands and make them numb is by looking at the bigger charts. So if we look at the chart on the right-hand side, is it really any different? Seeing that, well, if this was a supply level on this right-hand chart, and let's call this our big outlook chart. Let's call this our big outlook chart, yeah? Now, if we were just trading off of our big picture outlook chart, we probably say to ourselves, well, if this supply zone, or if you want to call it a pivot high, it doesn't matter if you call it a pivot high, but this pivot high, this supply zone, if this holds, yeah, prices are probably going to go back to their recent pivot low. You'd be trading one level to the next. Like we were looking at here, when we were looking at this chart here, we were saying, well, hey, you know what? This is a great supply zone and this is a quality demand zone for profit, right? And again, there would be nothing wrong in taking a profit off there. But by looking at the big picture chart on the right-hand side, by really looking at that, what we could do here is say to ourselves, well, imagine I was actually, what if I got into this trade and all I'm doing is kind of getting on board a move that's already happening? Because back when this trade triggered, if we look at this, we were somewhere around, let's put us, when this trade triggered, you were around 1.2, weren't you? So you were sitting around the 1.2. So you see where my purple line is? So at 1.2 from there, you still had room to go lower. Do you see below the line here? So what's happened is, while this weekly level has already hit, while the weekly level has already triggered and the move is underway, because the weekly move started where, guys? Well, the weekly move started up here, didn't it? If you look at this chart, the weekly move started right up here, didn't it? Up in this whole area, right? Well, it's easy looking, oh, I've missed all of that. But look, there was still so much on the table. So if you're saying, well, the weekly level has held, if the weekly level continues its momentum, where's it going to go? It's probably going to go down to the opposing weekly level. So what I like to do is say to myself, oh, okay, the price triggered somewhere around here. There's room to go to the opposing demand level that kicks in around 108.30. So while I've got a first target at this demand level on here of, call it 111.20, yeah, why don't I eye up the 108s or even the 109s conservatively for a continuation of this based on the weekly chart? So one of the things that I like to do is get my first targets for trade management. This is my first target. Found here, yeah. And then I'll use this one, final targets, found here. Does that make sense, guys? So we're looking for our first targets on the trade where we take our entry, but we're looking for our final targets on the chart where we look for the big picture. So it's like a cheaper way for us to engage what's going on. Does everybody understand that? So now the question is, what we then need to do, and this is a bit that I would encourage you as you start to build this big picture in here. It's kind of like just saying to yourself, what it is it's a process of saying to yourself, okay, I've got my opportunities on here. I've got my target on my 2-hour chart, on my 4-hour chart. But what's the big chart telling me? Because at the end of the day, I think too many people overlook what's going on the big time frame chart. And then they see a trade continue like this. You know, they see all of this price action here. And they're like, wow, you know, it was great. But listen, if this supply level here triggered and holds, where's it going to go back to? It's going to go back to the opposing demand level, right? Everybody understand that? So all we're effectively doing is using the smaller chart to give us a way in on the bigger chart. Now, what therefore we're going to need? Once our first target's been hit, therefore, what's a good way? What's a good thing to do now? What are we going to need? Once our first target's been hit, what do we got to do? Are we going to sit on it or leave it? I mean, it depends what your position size is, but what are we going to need, guys? You guys are traders. What do we need once that first target's therefore been hit? So, like, let's just reenact this. We've hit our first target here. What's going to be a smart thing for us to do? Somebody let me know. We're going to go for the around 1088. So let's mark the line on up over around the 1088. So this is our final target, yeah? Right, good. So we could say, right, we're in here, and what we're going to do is let's just say we were in with here. Let's say that we were in with, I don't know, let's say 2 lots. I'm just going to use some easy numbers on here. 2 lots short, okay? At this particular point, what we can do is at this area here, close one. Now, obviously, this is what I was taught to do by my very first instructor many years ago. Because at this particular point, I've made money between here and here. I can have my stop where it is. And by the way, as long as you've taken at least 2-to-1 on first target, if you get at least 2-to-1 for your first target, you can leave your stop where the other one is because you're still going to make money. Because that 2 is going to cover you for a loss of 1 on the other one and a little bit. So you're not even in a losing position at that particular point. You've covered yourself, okay? I do have that marked off. Great. I think that the price right now, that's very, very here, there's a zone that we're in right now, which is where a last big rally took place from. And it's between, you've got 10898 with lows of 10823. Call it 108. If we hold this 108 area, I would expect a rally. Okay. I would expect a rally on that, and I'd expect a rally first target to around 1.12. Okay, because there was a good takeoff from here, so for me it'd be key. But I will wait and see if anything forms on a smaller time frame, like maybe that 4-hour chart before I do that. Okay. So I will look to those smaller time frames for that. So I'm thinking, hey, it's not a clean area right now. If there's a nice clean area on the daily charts, I'm all over it, all over that. But what I like to do is kind of make sure that I can get small time frame entries as well, occasionally if there's not a good quality area. So I'm expecting while this 108 area holds great. So that's where I'd be going down to maybe something like a 4-hour chart. Let's take a look. I agree, Ray. There are some good time frames. Unfortunately, I just want to make sure that I get a good one because it's got to be nice and clear. You know what I mean? I want it to be nice and clear. I mean, you see, we're sat right in an area right now. So, I mean, if you were willing to just risk a tiny little bit for a nice opportunity here, great. Between 10877 and 10856. And that's got the potential to potentially, hit back up to supply at around the 10969. But what I like better for me, a little bit deeper into the zone, into the big picture, is this area here. I like this area here around the 108, the round numbers. Okay. Well, that's a great thing to do because you can have a long-term trade. Okay. You can have a long-term short going on with a short-term long as well, which is fantastic. And that can be good because I'd like to do that with the future. So I could have a long-term short going on, and then I could be doing some day trades for long trades as well, Delphin, on the future. So I find it's better to do it on the futures for that. That works real nice for me. But I like this 108 area here. So, and the reason I like this 108 area on the 4-hour chart is because then there's nothing to stop us. So it's kind of like my last buying opportunity that I would be interested in around 108.13 to 107.84, excuse me, because it's a much wider zone. All right. So I'll lean on those big picture levels until they get broken. Fundamentals, I don't tend to worry about so much. The problem with the fundamentals is they're always coming out a bit later. And I always find that whenever you see a move in the market, a lot of people are like, oh, it happened because of this. But that doesn't help me because if you say a sell-off that happened, if you say it, you're welcome. If you see a sell-off that happened and then they're like, oh, it's because of these fundamentals, you're a bit like, well, how does that help me? Do you know what I mean? How does it help me? Because you're telling me it's happened because of this, but I need to know when it's going to happen before it. That's why I just trust on price. I just trade price as price tells me, look for the obvious areas and so on. I mean, I've just been short on a euro and I've just closed out. I've literally just closed out a short on the euro. I had a short from actually up much higher, up in this 114 area because of this, and I had a little close out on here where I tried to get a short-term bounce on it. Then when it broke, I re-entered for another short on here because I expect that we're in an area where we could do it as well. You know what I mean? So yeah, that's the problem with the fundamentals. They never give me a leading indicator. The only leading indicator I've got is price, Jonathan, and that's the only thing I can do is say, hey, if I've got price, I've got a level, at least I know where my entry is, at least I know where my stop loss is. And the thing is, you could get a piece of fundamental news that can say, half the crowd could say, well, this is good news, half could say it's bad news, because you could have bad news, but people could say, well, it's actually good because it's not as bad as we expected. It's like, well, you know what? For me, weekly level, I know I want to be looking for shorts on small time frames. Weekly levels down here, I want to be looking for longs on small time frames. If this demand zone breaks, there's plenty of room to the downside, and I think with data and so on, it can be really, really big as well. Okay. So yeah, I find, I find the fundamentals interesting. I just find them very, very difficult. Okay. Just gonna look if there's any other things on here. Oh, I got that one. Ray asked me a good question. Have I ever got into a trade and let a winner turn into a loser? Great question. It depends on what you say about, like, how much is a winner. So, for example, when I day trade, I've done the statistics. When I day trade NASDAQ futures, I know when is a smart point to reduce my risk. So I'll say, at this particular point, it's a good time to reduce my risk because I know that 75% of the time, if it doesn't go beyond this area, and this is like more of a day trade, it's probably not going to hit another target. But again, I don't like going to break even too quickly. I'll just, I would I would just be tightening it up a little bit in that respect. So I would, what I think a good point is, I mean, if it's only gone like 1.5, 2 to 1, I hate it going into a loser, but I won't take the full loser on it. But the statistics, you've got to do your stats. I know with styles of trading that I've back tested things that work. So therefore, when you've gone through it and you're like, hey, you know what, in the long run, it benefits me to not over manage this trade, then you do it. And what's really important for you guys is to journal everything. You've got to journal the outcomes of the trade. So if you take an entry, how far did it go? Did it meet your first requirements? And then you get a set of statistics. So for example, I know that 80% of the time, when I trade, if it goes beyond 1.5 to 1, okay, if it doesn't break 1.5 to 1, 80% of the time it will come back and stop me out. So I'll reduce my risk. I won't let it do that. But if it does break it, 80% of the time it will carry on. You understand? So that's in like that specific market. So it's very important to do your analysis on these markets that you trade and to give yourself, obviously, some manage yourself in the respect, because trade management comes down to it's trade management is a discovery game. So you've got to go with a very simple thing. So I always say, firstly, start, just do risk 1 to make 3 if the chart suggests it. Yeah, get good at that. Then, but have final targets. And then if you see that half the time it goes to my final targets beyond 3 to 1, that tells you that 3 to 1 is a good place to take a partial profit because it's going to carry on 50% of the time. So you might as well leave a bit on the table. Do you understand? So I think it's very, very important to do it in that perspective as well. Trade it take it like a long time frame. Take longer term profits on short-term time frames, short-term time frame for entry, long-term time frame for big targets as well. Okay. Right, so you're going to be focused on there. What do I think of Swiss Sparkle in January? The CHF Floor. I think, to be honest with you, it was horrible what happened with it all, Andy. But at the end of the day, a lot of people who are trying to play that carry trade with it, and a lot of people who are trying to play that trade with the euro against the Swiss because of that floor were asking for trouble because in my experience, nothing lasts forever. So I was actually telling my own students just to stay away from the Swiss pairs for that time because I was like, it's all well and good while they have the ceiling, the Swiss. But if the SMB removes that, all hell's going to break loose. Why put yourself in it? And I was just going, but it's an easy trade. It's an easy trade. It's an easy trade. And I'm like, well, yeah, but everything comes to an end and it's not going to feel like an easy trade when it unhinges. So I feel that when that kind of blatant, too good to be true trading opportunity is there and it just keeps working, it's probably best to stay away from it. Do I think it was reckless and so on of the Swiss National Bank to do it? you could argue it would, but the people who made money out of it wouldn't be saying that. So it's always two sides to every story, right? You know, when you say something, when you say you agree with something, it's because, you know, if you say something's right, it's usually because you agree with it. And if you say something's wrong, it's because you disagree with it. And we all agree and disagree with different things. So that's my feelings on it there, Andy. Finally, from Delphin, I've been journeying my trades for 2 years, but when it comes to fine tuning my strategy, I'm always torn between reacting fast to mistakes and letting statistics play out over the long run. You know, the market sends you so many different signals, Delphin, that at the end of the day, your opinion doesn't matter. My opinion doesn't matter. I think the only thing that matters at the end of the day is what do your stats tell you? What do your stats tell you? And it becomes less about you and more about the trade. And I find that, you know, it's about not overthinking and taking action. We always, you know, it's like you get a few losses and then you pass on a perfectly good setup, and that's always the one that works. At the end of the day, most of us make decisions based on our emotions. If we can remove the emotion and trade on pure logic in the market, that's all it really is. That's the only way it's ever going to work. So, and I think that people forget that it has to not work for it to work. Do you understand? There has to be flaws in it. If there weren't flaws in it and you didn't have stop outs, then it would eventually not work all the time. You know, it's about not every trade working, but the strategy working over a period of time. So lots of good questions there as well. Okay, just about to go now, but final one on here. Before you leave, would you kindly look at Eurodollar 60-minute between 07 and help me decide if it's a level after all? Yeah, just see what the robot is telling you. Yeah, I'll just take a quick look on that and see. We're looking down at the 760 to 730, right? Yeah, I mean, I think this is good, and I like this for an area. I like this for an area because it's very low down, right in the meat of this weekly area. And much like the higher level that I drew on here, I mean, if you wanted to tighten this 08 level up too, see there's nothing below it. And I love these areas when there's a nice rally and there's nothing below it because it's a very clean area. So, you know, you can trap a lot of the breakout traders who are going to short those lows. Yeah? So they're quite nice, those particular zones. All right, cool, guys. Look, it always goes too quickly, but thanks very much for your time. You know, I try to kind of just give you some different ways of looking at things while bringing it a little bit of my strategy in as well. I'm currently working. I'm currently working on a DVD for FX Street as well, putting together some of my own specific things outside of Online Trading Academy's core strategy. So I'm currently working on that. So I'm sure you guys will let you guys know when that's all put together as well. So thank you for your support as always, guys. I'll get on with that and hopefully have that done in the next couple of months and so on as well. And great questions, by the way, and happy trading as well. All right. Thanks a lot for your time, and thank you, FX Street. I look forward to speaking with you next month. Okay. Enjoy the rest of May. Be well. Take care. Thank you, guys.